Imagine watching your favorite crypto project face a monumental setback. Just as excitement builds for a breakthrough Binance listing, reality delivers a harsh rejection. Today, we uncover the full story behind the Binance listing rejection and what it means for the future of Picoin. Hey, pioneers! Welcome back to TJ Crypto World Channel, your go-to hub for in-depth crypto analysis and the latest blockchain breakthroughs. I'm your name, and in today's video, we're diving into the complex narrative behind the PiNetwork's failure to secure a Binance listing. If you've been following the rollercoaster ride of Picoin's value and anticipating its debut on the world's largest digital asset exchange, then you're in for a detailed expose that cuts through the noise. Make sure you watch until the end, because we'll break down every factor behind the rejection, from regulatory ambiguities to liquidity hurdles, and what these challenges mean for Picoin's future. And if you haven't already, hit that like button and subscribe to join our growing community of crypto enthusiasts. Picture this, a project with an enormous community, massive token unlocks, and high expectations, only to be slammed by Binance's decision to stay away. In today's deep dive, we'll explore the critical gaps in PiNetwork's infrastructure and market dynamics that led Binance to pass on listing Picoin. Stay tuned as we reveal why liquidity, regulatory compliance, and decentralization play pivotal roles in such decisions, and what this means for investors eagerly waiting for a bullish turnaround. Trust me, you won't want to miss this. Let's dive straight into the heart of the matter, the Binance listing rejection. At the core, this decision stems from a mix of regulatory gaps, insufficient liquidity, and fundamental issues within the PiNetwork's current setup. Despite the fervent support of its community, Binance, the largest global digital asset exchange by trade volume, has confirmed that it will not list Picoin for now. This news has frustrated countless supporters who were banking on a major listing, hoping it would ignite a bullish rally. But let's break down why Binance made this call. The Mainnet dilemma. One of the primary hurdles facing Picoin is its previously closed Mainnet structure. Unlike established cryptocurrencies that facilitate free, public transactions, PiNetwork operated within a controlled environment. This closed mainnet limited user transactions, making it difficult for exchanges like Binance to accurately assess key factors such as liquidity, usability, and overall market activity. Even though Pi opened its mainnet back in February in an attempt to address these concerns, the legacy issues continue to cast a shadow over its readiness for a major listing. Regulatory ambiguities and centralization concerns. Another major obstacle lies in Pi's unclear regulatory status. Binance adheres to strict global compliance standards, ensuring that every asset listed meets anti-money laundering protocols and securities laws. Picoin, however, has yet to secure clear regulatory approvals, which inherently makes it a riskier asset for a platform that prioritizes transparency and legal compliance. In addition, there are concerns about the governance model of PiNetwork. Unlike decentralized projects like Bitcoin, where decision-making is spread across a diverse community, PiNetwork's development is heavily steered by its core team. This centralized control has raised red flags for Binance, which values a decentralized, community-driven approach when evaluating potential listings. Market liquidity and trading volume challenges. Liquidity is another critical factor in Binance's decision. For an asset to be listed, it must demonstrate robust market liquidity, ensuring a stable trading environment and independent price discovery. Picoin struggles in this area. Its market liquidity is insufficient to support stable trading, and its trading volume falls short of what major exchanges typically require. Moreover, the token has seen a significant decline in value recently, a drop of over 70% from its peak of $2.98, resulting in a sharp fall in market ranking from 11th to 24th. This performance not only undermines investor confidence but also weakens the case for inclusion on Binance. Without a healthy, active market where Picoin is freely traded, listing it would expose the exchange and its users to undue volatility and manipulation risks. Upcoming token unlocks. Adding pressure. To add to the mix, a massive token unlock is imminent. More than 105.96 million Picoins, equivalent to around $85 million in value, are scheduled to enter the market within a 30-day period. Notably, a huge unlock event is set for April 3rd, when 6.8 million tokens will be released in just one day. Over the next year, a total of 1.6 billion Picoins will flood the market. This surge in supply could further depress the price and increase selling pressure, complicating the liquidity scenario even more and making it harder for the token to bounce back in the short term. Investor sentiment and price predictions. Despite the bearish outlook, some market analysts see a potential silver lining. There are voices in the community suggesting that the current price decline might present a buying opportunity. For example, technical indicators such as buy RSI divergence are hinting at a possible rebound. Analysts point out that the current Fibonacci zone might act as a supportive base, potentially setting the stage for a turnaround in the near future. However, this optimism is tempered by the reality of the token unlocks and liquidity concerns. Until PiNetwork addresses these structural challenges and achieves a clear regulatory status, the path to recovery remains uncertain. Investors must weigh these factors carefully. What seems like a buying opportunity today could turn into a prolonged period of instability if the core issues aren't resolved. A long road ahead for PiCoin. The decision by Binance not to list PiCoin isn't just a temporary setback, it underscores deeper systemic issues. The closed mainnet, regulatory uncertainties, and liquidity challenges are critical barriers that must be overcome for PiCoin to secure a spot on major exchanges. While the PiNetwork boasts a massive community of supporters, sheer numbers aren't enough to guarantee success in a competitive, highly regulated market. For PiCoin to regain momentum, it must not only improve its market liquidity but also gain the formal regulatory approvals that will bolster investor confidence. Only then can it position itself for a bullish rally and potentially earn a coveted Binance listing in the future. What's next for PiNetwork? Moving forward, PiNetwork's path is fraught with challenges, yet it also holds promise for those willing to wait for the necessary transformations. The community and developers behind Pi will need to focus on enhancing the network's transparency, liquidity, and decentralized governance. Addressing these issues head-on could pave the way for future listings on major exchanges, including Binance. Until then, the community must remain patient and vigilant. The current rejection is a wake-up call, a reminder that success in the crypto space demands more than just a large user base. It requires solid fundamentals, regulatory clarity, and robust market dynamics. If you're finding this deep dive into the Binance rejection insightful, please hit that like button and subscribe to TJ Crypto World channel. Share your thoughts in the comments below. Do you think PiCoin has a chance for recovery, or will these issues keep it in the red for a while? Your feedback is crucial in shaping our future discussions. Revisiting the big picture. In conclusion, Binance's decision to reject PiCoin is a multifaceted issue driven by core challenges in PiNetwork's current framework. The closed mainnet structure, regulatory ambiguities, and liquidity shortcomings present significant obstacles that cannot be ignored. For the Pi community, this is a pivotal moment, a time to reassess the project's fundamentals and push for the improvements needed to meet the high standards of global exchanges like Binance. The journey ahead for PiCoin is uncertain, and while some see hope in technical indicators, the looming token unlocks and market dynamics suggest caution. Ultimately, true recovery for PiCoin will depend on its ability to address these critical issues head-on. Before we wrap up today's detailed analysis, if you appreciate this deep dive into the challenges facing PiCoin and want to stay updated on its future developments, make sure to hit that like button and subscribe to TJ Crypto World channel. Your support and engagement help us deliver the most insightful and timely crypto news out there. Joining me on this in-depth exploration of the Binance listing rejection. I truly appreciate every pioneer who takes the time to learn and grow alongside us in this ever-evolving crypto landscape. If you enjoyed this video and found it valuable, be sure to check out our other content here on TJ Crypto World channel for more expert analyses and the latest updates in the world of blockchain and digital finance. Until next time, stay informed, stay skeptical, and keep pushing the boundaries of what's possible in crypto. This is TJ Crypto World channel signing off. Thank you, and I'll see you in the next video.